How does a currency lose 90% of its value in just 7 years? Iran's Rial hit 1.3 million per US dollar by the end of 2025, down from 140,000 in 2018. A single grain of rice now costs 800 rials. Protests erupted in Tehran as inflation hit 42.2% and families watched their life savings become worthless. This isn't just Iran's problem, it's a masterclass in how money fails. Three forces combined to destroy the rial: sanctions, money printing, and geopolitical conflict. We'll see how a desperate government made one decision that guaranteed collapse. Let's break down exactly how a national currency collapses in real time. The first blow came from outside. In 2018, the U.S. reimposed sanctions after withdrawing from the nuclear deal, targeting Iran's primary revenue source, oil. The impact was immediate and brutal. Iran's oil exports collapsed 84%, from 2.5 million barrels daily to barely 400,000 by 2020. Imagine your paycheck dropping from $2,500 to $400 overnight. That's what happened to Iran's government revenue. Iran couldn't just lose the revenue. They had to sell what little oil they could move at a massive discount. Chinese buyers pay $3 to $8 less per barrel than market price. At 1.5 million barrels per day, that discount costs Iran $135 million every single month. That's $1.6 billion a year Iran should have had but doesn't. Iran fought back. The government developed what's called a shadow fleet. These ships use fake flags, turn off tracking, and transfer oil in the open ocean. By the end of 2025, Iran recovered exports to 2.15 million barrels per day, but they were still selling at that brutal discount. Billions in lost revenue every year. The sanctions also cut Iran from the SWIFT banking system. Money sat trapped in foreign accounts Iran couldn't touch. Meanwhile, foreign reserves depleted month after month. A dual exchange rate emerged. The official rate looked strong, but the black market showed reality. The gap between these rates widened to millions of rials. An Iranian business owner needed $10,000 of machinery parts. At the official rate, it should cost 140 million rials, but they couldn't access dollars at that rate. On the black market, it costs 280 million rials. Importing anything suddenly became impossible. In 2025, the U.S. sanctioned over 50 more entities. Every few months, another round hit. By early 2025, oil revenue hit only $1.4 billion, 32% the forecasts. Iran earned some money, but nowhere near enough. Losing oil revenue was just the beginning. What came next turned a crisis into a catastrophe. With oil revenue collapsing, the government faced a choice: cut spending or find another source of money. They chose the second path, and it proved catastrophic. Imagine a bakery with 100 loaves of bread. Suddenly there are 140 customers, but still only 100 loaves. Prices skyrocket. The bread that cost 1 rial now costs 1.4 rials. More money chasing the same goods. That's the death spiral. Now let's see how that played out in Iran's real economy. Under President Raisi, money printing rose 83%. Liquidity surged 73%. The economy wasn't growing nearly that fast. The government made promises it couldn't pay for. These are called unfunded commitments. Without oil revenue, the central bank became the money source. Banks doubled their debt to the central bank in 12 months. They owed 65% of all money in circulation. People didn't trust the currency, so banks couldn't attract deposits. Banks borrowed directly from the central bank instead. New rials were created out of thin air. Total money doubled during Raisi's time in office. GDP grew only 3.1%. When money grows 40% and the economy grows 3%, the currency must fall. Every rial printed diluted the currency's value. As the rial weakened, imports became more expensive. Higher import costs drove inflation higher. Inflation forced more money printing. Each cycle made things worse. A middle-class family in Tehran felt it firsthand. Monthly expenses rose from 30 million to 280 million rials. Their income only doubled. Suddenly, they couldn't afford meat. President Pezeshkian tried to stop the bleeding. He capped budget growth at 2%. But the damage was already done. Confidence couldn't be restored. The central bank governor resigned amid protests. Gasoline prices jumped to 50,000 rials per liter. Transportation costs rippled through the economy. Ordinary Iranians were trapped in the middle. Money printing weakened the rial, but panic finished the job. Panic destroys currency faster than policy. February 2025 brought renewed maximum pressure. Traders sold rials in anticipation. June 2025 strikes ended hopes of sanction relief. Crypto outflows surged 150%. September brought renewed international sanctions. Fear caused selling. Selling caused devaluation. The cycle fed itself. The rial plunged past 1.3 million per dollar. Each crisis became a self-fulfilling prophecy. Billions went to foreign conflicts as the economy collapsed. Foreign reserves kept draining. Capital flight accelerated. The wealthy escaped. Ordinary people couldn't. So how does a currency lose 90% in 7 years? Sanctions cut revenue. Money printing filled the gap. Geopolitical shocks triggered panic. Together, they destroyed the currency. That grain of rice rose from 11 rials to 800. Money is only as strong as the system behind it. When both fail, money dies fast. Iran's story is a warning worth remembering.